If you're 65 or older, you may be hearing that there's a new senior tax deduction starting soon, and you may be wondering whether it actually helps you or if it's just another headline. Let's slow this down a bit and walk through what this deduction really is, who it's designed for, and what it does and does not change about taxes and retirement. Hi, I'm Judith Nagley with Marathon Wealth. I help people understand their money without jargon, shame, or overwhelm. This is an education explanation, not advice, to help you understand how this new senior tax deduction works. So, what is this new senior deduction? Starting with the 2025 tax year, there is a new temporary senior tax deduction available for eligible individuals who are 65 years or older. That means the deduction would first show up on a tax return filed in early 2026 this year. This deduction is commonly referred to as a senior deduction or senior bonus deduction, and it is designed to provide additional tax relief to older Americans who still have taxable income in retirement. One important thing to understand right away is that this deduction can be claimed in addition to an existing senior tax benefit. It does not replace the standard deduction or any other age-based benefits. It is layered on top of it. Deduction versus credits. Well, why does that matter? Why do we want to talk about that? Well, this benefit is a deduction, not a tax credit, and that distinction matters. A deduction reduces the amount of income that is subject to tax. A credit reduces the tax owed directly. Because this is a deduction, its value depends on how much taxable income you have, where that income comes from, and how your retirement income is structured. This deduction doesn't help everyone equally, and it isn't meant to. It's meant to reduce taxable income for qualifying seniors who still have income exposed to tax. Now, how much is a deduction, and who really qualifies? At its maximum, this new senior deduction allows up to $6,000 for single filers and up to $12,000 for married couples filing jointly, if both qualify. To qualify, you must be age 65 or older by the end of the tax year, and a qualifying individual must have a valid Social Security number. This deduction is temporary, available for tax years 2025 through 2028. That's important because it means it's not a permanent change to the tax code, at least not as it stands today. The deduction begins to phase out once modified adjusted gross income, or MAGI, exceeds $75,000 for single filers and $150,000 for married couples filing jointly. That tells us something important about who this deduction is designed to help. It's targeted toward retirees with moderate income, but not high earners, and not everyone over age 65. Now, how does this affect Social Security taxation? Well, one area where this deduction may help indirectly is Social Security taxation. Because Social Security is taxed based on income thresholds, reducing taxable income can, in some cases, lower the portion of the Social Security benefits that are subject to taxes. However, it's important to be clear about expectations. This deduction does not eliminate the possibility that Social Security benefits are still taxable. It may help reduce taxable income, which could affect how much of those benefits are taxed, but it does not change the underlying Social Security tax rules. This is a good example of why understanding mechanics matters more than the headlines. So the deduction can be helpful, but it works within the existing system, not outside of it, right? Now, what this deduction does and what does it not do? This new senior deduction does not mean retirement taxes disappear, Social Security becomes tax-free, does not mean planning no longer matters. It's targeted temporarily adjustment designed to reduce taxable income for certain retirees. Not a complete solution to retirement taxation. When you look at your retirement income, which part of it feels unclear from a tax standpoint? In my opinion, Understanding comes before deductions. I'm Judith Nagley with Marathon Wealth and Protection Strategies.